Alrighty, guys. Great conversation today with Kelly Lannan, who's a real estate developer up in Phoenix. Has an awesome Substack called Bitcoin Urbanism. Highly encourage you to go check it out. Welcome to Tucson Bitcoin podcast. Today we're talking about how real estate is a giant Ponzi scheme and how Bitcoin can lead to sustainable cities. I got into Bitcoin because I saw that good money addresses a lot of the issues that we see in society. I care a lot about unfair and extreme wealth inequality. I care about pension crisis that we're seeing right now, how old people can't retire, how normal people are just broke, and just drowning in debt. Those are the reasons why I got into it, and it was really interesting hearing Kelly's perspective on how sound money changes the game when it comes to building developments, because instead of building a bunch of stuff that we don't need because we need the government to collect fees on it to pay for infrastructure that they can't afford to maintain because they spend their money so recklessly, we move into a world where we build stuff that is actually of high quality and that people want and need, instead of just what is resulting from easy money like we see now. So this is a great conversation. I learned a lot from Kelly, and I hope you enjoy it as well. Alrighty, we're recording. Good to have you on, Kelly.
Glad to be here. Thank you for inviting me.
Sure. So what is it that you do in real estate?
So I am a real estate developer. So what I do, I work in a family office. My dad's been doing it for about 35 years. So we buy land, raw land, or land with buildings on it. And what we do is we try to figure out how many apartments or condos or single family homes can we put on this dirt. And then we go through the process. So we go to the city, say, this is what we'd like to do. What requirements do we need to meet? And then from there, we draft all the plans from all the consultants and stuff that we hire. And then we take it back to the city, go through the process, and eventually, they'll approve it. And then we also build everything that we design. So we will build our apartments or condos and lease them out to people, and then we sell it off. So we do that, rinse and repeat, and have been doing it for quite some time. So
that sounds like a really all-encompassing job just to do it. That's a lot to handle, both buying the real estate and building and developing.
Yeah, it certainly can be. So we're essentially a one-stop shop. A lot of developers, will sub out most of the responsibilities to other people, especially when it comes to the construction side of things. But the nice thing about being a one-stop shop is that we can control a lot more of the details, and especially in construction, the details are what kill you. So we can control how the plans turn out from the architects or the civil engineers. Basically, if we know that, putting water storage underground for stormwater is better in this situation and in this location than doing it above ground, then those are the things that we can kind of control. And then when it comes to the construction side, we can control essentially the sound that goes between the units. So if you're building apartments, the number one reason people move out is because of too much sound. Nobody likes to hear their neighbor. So we do a lot of that stuff, and then we manage the construction ourselves to basically be the quality that we want. So we've built right around 5,000 condominium units in the lifespan of my dad's career. So, we have our list of things that are gotta haves for consumers that we know that they like and that they'll pay for. So that allows us to control the process from beginning to end to make sure that we basically meet the market's needs and that people don't try to cut corners. So.
Yeah. It's my mentor's has a tiling business, and just the thought of handling all of it just seemed from hearing him talk. I mean, that in of itself is quite a bit to deal with. So it's pretty impressive. Um, but yeah, so what the heck is going on in the real estate market right now? I think a lot of people are wondering that.
Well, this is the classic case of what cheap debt will do. So, most real estate is priced in terms of the cost of the debt that you get to buy it. So, let's say that you wanted to buy a house, right? I think the median price for a house, at least in Arizona right now, is probably for a new house is going to be about $375,000. So, if you're just going to pay cash for it, you could pay the 375,000. But if you wanted to get like a 30-year federally insured mortgage, which is like your typical FHA loan, um, the cost of the house is going to be, or I guess what you can afford to pay is equivalent to what you can afford to pay per month. So your budget is not determined by the maximum cost of the house. It's determined by what you can afford on a monthly basis. So if you can only afford to pay $1,000 a month for your mortgage and rates are, 10%, your budget is going to be much smaller than it would be now when rates are 2 and I think it's like 2.72 the last time I looked. Um, so your budget gets bigger as rates go lower. Um, so in the housing market, that's kind of what's happening. Now, on top of that, you've got an issue where all these lockdown states, the people that can move are moving. Um, and that's kind of it for the residential market. But when you get to the commercial, industrial stuff like that, it's the same deal. If I build an apartment and the operating income is, $100,000, it's going to trade at what's called 5 cap. So that's $100,000 divided by um, 0.05, and that gives you 5 million. So people are bidding down the cap rates on property just to have a stream of income, right? Because if you go out and you're trying to buy like a government bond or, T-bills and all the stuff, you're not really making any money. So investors are forced to stretch for yield, and property is a really easy asset class to kind of do that with, just because it's more or less straightforward. You can guess your expenses with reasonable accuracy, especially if you've been in the business. You know what you should be paying or shouldn't be paying. Um, in cleaning fees or landscape, or what your turnover is in an apartment, stuff like that. Or if you're in offices, what your TI should be, what you should be getting back for those, stuff like that. So there's not a whole lot of invention and new ideas going on in that kind of space. So people basically just outbid each other, and they're really, they're willing to take less returns, just knowing that they have, a piece of real estate. So
Yeah, I mean, it seems like people are fleeing cash in any way that they can, and yeah, kind of what you described is the philosophy of the average American is it's not about the overall cost of something, it's about the monthly payment of it. And that's what people are thinking about when they're doing it. I made the mistake of financing a car. Well, it might not have been a mistake because it allowed me to buy Bitcoin and sit on it instead of putting all the cash down. But I get letters from different creditors saying, we'll refinance your car for like almost the same interest rate. We'll just elongate the payments, and it'll lower your monthly. And I think like they get away with that because so many people are worried about that monthly payment rather than the overall cost of things.
yep,
Yeah.
yep, and I would agree. And I did the same thing. I just went through the process of buying a truck, and I just buy used vehicles. Just having a farm and a ranch and doing construction. I don't need to show up to the job site in a new vehicle. But yeah, they they basically only give you, 60, 72 or 84 months. And the idea is just they do that so they can get lower interest, or excuse me, lower payment totals. And that's basically what people do. They just buy what they can afford. Um, if you're saving money and buy, stacking sats, that's the way to go because number go up. But yeah, it's in the wacky fiat world we live in. The lower rates go, um, the I guess the higher the craziness. So
Yeah. Yeah. You got to buy used vehicles until at least 2030, 2040, and then we can get cash in for our Lambos.
that's right. I'm looking forward to the 2030 Lambo. I don't think those will have wheels though. I'm hoping hyper Bitcoinization is really going to up the ante here.
Yeah, so let's talk about that. So you have a great Substack called Bitcoin Urbanization. So what does that mean?
So Bitcoin urbanism is, I guess, my attempt to see what and how cities will develop given a sound monetary environment. So how does the planning work? Architecture, the building materials, kind of all the stuff that goes into the process today, which is a highly regulated bureaucratic process. How does that work when you have sound money? Um, I'm kind of the opinion that over time, the current development process of going through the city zoning, all this other stuff, is really very extractive in terms of cost. So, like the Home Builders Association put out a report that estimates, I think it was like 32 or 31% of the cost of the overall cost of a home when people buy it is attributed to government process.
Hmm. Who would have thought?
Yeah, it's been a very long road, 100-year road to get to that number, but having experienced it for myself, I don't doubt it.
Yeah. I mean, I don't think people realize how expensive it is to be in a relationship with our government right now. Like,
Yeah. Well, and it's also for property development is mostly just local, unless you're dealing with wetlands, the coastline. You're not dealing too much with federal regulations, unless the EPA declares your land. I don't know, whatever nonsense that they come up with. Um, you don't really have to deal with it too much, but a lot of times it's just local expenses. Some states are also better than others. Arizona is very development friendly, whereas somewhere like Pennsylvania, um, I don't know how they build anything because it has to all go through the state. So um, it comes down to cost in, submitting plans, and a lot of it is time. Um, if you were really good pre-COVID, you could probably have an apartment. I do sub 50 unit stuff, so you could probably have a project like mine into the city and then out with approvals in 6 months, and that would be um, equivalent to the stars aligning and you not having issues really whatsoever. Today, that's probably closer to almost double. Um, so anywhere from 11 to 15 months, I would say now is kind of uh, the normal deal. And that's just to have a site that you want to build something on, and then you start the process until it's finally approved with the city. So
yeah. Yeah. It's I think one of the greatest things that could ever happen is for people to be forced to pay all their taxes at once instead of like their income taxes specifically, instead of having little bits taken out of their paycheck so that they can realize how much is being taken from them. And I think, yeah, it's when you really dive into it, it's pretty wild. Just the amount of waste that goes into government, and um, it is a bummer. And that's one of the things that's interesting about Bitcoin. So when did you get into Bitcoin?
I would say I got into it. Well, originally, I graduated college in 2011, and that was in May of 2011. That was right before Bitcoin ran up from 11 to $32. So I had just blown all of my college graduation funds on a brand new gaming PC, and I thought I would join in on the Bitcoin fun. And so I downloaded the course off my computer here in one of my backup hard drives that's been copied like 8 times since then. But turned it on mining. You have no idea what I was doing, no programming or any. Um, and I must not have been doing it right because I didn't get anything. And but what I did get was a $650 bill from uh, my power utility, which at the time I couldn't afford, and I kind of rage quit. So that was my first experience, and then I got back into it. I would say late 2016, early 2017, and I hopped on Twitter, which at the time was crypto Twitter. It wasn't really Bitcoin Twitter, and kind of just laid around, reading stuff as it was coming along. It really didn't hit until the Bitcoin standard. When I read the Bitcoin standard, that kind of pulled everything together. I mean, I'd always been around Austrian economics just through the Mises Daily emails, because they would send out an email with like three articles, and I'd always read that stuff, but I never really picked up human action because, quite frankly, it's a daunting, 3-inch tome to grab. But yeah, so that was kind of how I got, I guess, back into it. And I think with most Bitcoiners, I kind of had the same thing where you shitcoin for a little bit, got to touch the hot pan, and then yeah, it was just one article after that, one article after the next rather, and some podcasts, and here I am, a toxic maximalist.
Yeah, that term toxic maximalist is just such a bad one. I think it's a term that was created, I think, by scammers and is perpetuated by people that just don't understand.
Well, I
Man,
think that was Vitalik Buterin who dubbed us, that, if I could say that. But always adopting stuff from your enemies to make yourself stronger. Just like the old saying that there's no bad news for Bitcoin. Nothing's bad for Bitcoin. So
yeah, yeah, the scammer in chief himself. Um, so yeah, you adopt um, titles or names from your enemies. So you said that a blue check mark did a drop by troll on Bitcoin Urbanism. What happened there?
so I was it was totally unrelated at I think in a tweet. Um, I followed he's a legendary planner from Toronto. He was the one who basically revived Toronto. I'm drawing a blank on his name right now, but somebody on his staff an article basically saying that planning needed to rid of its whiteness, and that white planning was the reason for all the social ills in minority neighborhoods, and that it was totally unequal and all this other stuff. And I kind of just said, that's just a bunch of postmodern, garbage. Like, this has nothing to do with anything. Um, and then another guy jumped in who worked. I don't know if he worked for the city of San Francisco, but I don't think he said something very pleasant to me. So I responded in kind of trolling him. And then the guy he said Bitcoin urbanist gonna Bitcoin urbanist, and I was like, oh wow, that's actually pretty good, because I had been thinking about these ideas for some time, basically since kind of since 2017, but I didn't really have a coherent message to put together. So anyway, so he ended up being he does some sort of math with traffic, and he went to Arizona State. So I told him thanks, and hand wave, and that was pretty much it. So Bitcoin Urbanism was born on a blue check mark driving by and dropping a good name. So I'll take it.
Yeah. Yeah, that's a funny story. Um, yeah, as far as like central planning, the central planners sure were successful in segregating Chicago and ruining the city, with the projects.
Mm-hmm.
That's something we're
Yep. The legacy of Robert Moses lives on in its destructive ability to ruin things even today. So it's pretty fascinating that that stuff that stuff even occurred. But that kind of plays into how we got to where we are today, and how it changed basically from, I guess, now like 100 years ago. So how things used to be and how they are now, it's shocking that you know that it even works. So
well, I don't know. I mean, I guess that's a debate, with the entire all of society being built on top of a giant Ponzi scheme. The question is like when and if it'll break. And I was talking with some people. I mean, I personally, I don't know a ton about real estate, but I have trouble seeing home values really falling in the near future as long as interest rates are at zero. And I mean, it seems like they're even willing, if things were to slow down, to go to negative. If they, um, I just don't ever see those going up again. And then as they continue to print money, it just inflates the asset values. So it's yeah, I mean, it is a question of like if and when it will break for sure.
well, and it's um, the big thing that's happened, especially since the March crash in 2020, is that how much the Fed has been buying the mortgage-backed securities. So the current housing boom is basically just being driven by the Fed. They promised to buy, I think it was like one and a quarter trillion, MBS over whatever the course of the year, and that's set to run out at the pace that they're going. I think um, it's February, so probably sometime in April or May. And I don't doubt that they read the program and just keep buying, because they're the only ones buying, and they're the ones. The Fed is the reason why the 30-year rates are so low. Even some of the the other rates, the 15 years, the jumbo loan stuff. A lot of that's being brought down just because uh, you know the Fed's out there buying up all the federally insured mortgages, and you know, uh, keeping the party going, I guess.
Yeah, oh man. A lot of the people have trouble really putting this together and understanding why this is so problematic for the average person. And I like to try and break things down in simple terms. So, if home values keep on going up, people won't be able to afford homes, or like normal people won't. They'll be in debt forever. And it's, I mean, it's pretty incredible. So, like, your average person our age gets out of school with a tremendous amount of student debt if they go to school, finance a car, you know, job markets is sucking right now and probably will continue to. Um, and then they go and like buy a house and they're just like swimming in endless amounts of debt. And it's just like, I mean, at that point, rent a center makes sense of like going and financing your couch or your TV instead of buying it, um, because it's just one bad decision after another. But um, a lot of people don't understand why that's so problematic. It's um, what I'm seeing being taken away from people is their voice, because when you're in large amounts of debt like that, you are beholden to other people. You just don't have any sort of self sovereignty, um, because you have to bend the knee, to your lenders pretty much, and I mean, that's problematic. I mean, we supposedly live in a representative democracy where the government is like accountable to its people, but if the people have no like ability or no voice, then where's the accountability at? And I, yeah, I mean, I just see that as super problematic, and why Bitcoin is so important. But
That makes slaves of us all.
yeah, I mean, that's why we're seeing conversations about UBI right now. Like, man, it'd be funny to go back like 20 years and tell people that like UBI was going to be a serious consideration.
I don't even know if it existed as that name back then. I think it was there wasn't a whole lot of wordplay. It was giving people money. Now UBI is synonymous with something that that you deserve under the circumstances. Um, but government is the chief problem creator and the chief problem solver. They just happen to create more problems that they can solve to create new problems. So I see that as with the lockdowns and all the other silliness that's going on. This is not something that needed to happen.
Yeah. Yeah. So how do you see the real estate market under Bitcoin standard? Like, how is that different?
Well, so um, right now, I guess to draw on our conversation about like buying these houses that are going up in value and the Fed's buying all the debt. So a lot of times, real estate is very reactive to demand. There is speculative activity. So if I wanted to just buy land to build a house, just on a whim, that's hopefully somebody will buy it when I'm done, that would be a speculative activity in that sense. But a lot of times in real estate, in any kind of real estate, really, it's a pull process. So if people see the numbers going in a direction that they like, so if growth is going up or home prices are going up, new people are moving to, let's say, Phoenix. We'll just keep it Phoenix as our example city. That developers, whether small, private, corporate, whatever flavor that they come in, will then take activity to buy land and go through the entitlement process with the city and draw up construction documents, all that stuff. It's a very long and expensive process. So as an activity, you're not going to get involved in it, knowing that it's very expensive. And if something changes midway through the process, you're going to be out all your money. So, if I buy, a 2 acre site, it's going to take me, now that I know it's going to take me approximately a year to get my desired plans through the city. So if I have to tie up the property for a year, then the seller has to wait to be paid basically until I can get an approved design for the site. That's for even a small operation like ours. That's hundreds of thousands of dollars, and money out the door that's never coming back. And it's a very expensive activity to do, not knowing what's going on. But in the situation like what we have now, there's no real reason not to do it, assuming that you can get the land. So, under the fiat credit standard, um, everything is just financed, right? So the end user, in this case, would say, well, we're building a home or a subdivision of homes. We know that that end user has to take on debt in order to buy the house because they can't afford it with cash. At least it's something like for new buyers, I think it's like 90+% get a loan in order to buy it. So me as the developer, I know that. So I'm not going to take on the risk to build out a subdivision. unless I know that everybody can get a mortgage at the end of the day, right? Because that's your cash flows. That's how you get your money to come in. You can start, you know, well, you can continue to pay the interest on your loans, your construction loans, return money to investors, stuff like that. So at the end of the day, you're going to play ball as best you can, especially with government authorities and in the design process, as long as whatever you get through that process, the numbers work at the end. So if I want to build 100 houses and I go and I present 100 houses, and after the city makes their adjustments and tells me I can't do this, can't do that, we want this here, yada yada yada. Let's say I'm left with like 75 houses. So if I go back to my Excel sheet or the drawing board, so to speak, and those 75 houses pencil, then I'll do the deal, even though, you know, I just lost 25. But let's say that it came back at 60 and I can't do the deal. It's like, well, you know, then you make that phone call and you move on. But if you're in this kind of environment where, like, for example, Phoenix home prices on average are up 14% over the last year, you know, you're going to take the risk that maybe 60 houses work and that you go through with it. Um, and then, you know, on the other side, cities are also going to be, you know, I guess my experience is only with Phoenix area cities, so I don't want to speak for the whole country because obviously it'll be different. But they're going to be more prone to push those plans through, especially in a hot market, so that they can collect all the fees and stuff like that. Because you know, it's something um, that I've noted about on the Substack. They need the money because they can't afford the infrastructure that they already have, and that's from a long train of government regulations that date back all the way to the Great Depression, when, you know, this whole mess started. So under a sound money or sound monetary standard, something like Bitcoin, you know, I'm thinking that we were into like a traditional development pattern. So that's thinking like a good example is like Manhattan. So the West Village is probably one of my favorite neighborhoods to be in. You know, it's like when you go to cities in the Midwest or the South, older cities where you go to a main street and you can tell, like, they all look the same, right? The buildings are 20 to 25 feet wide. Maybe they're 2 or 3 stories tall, brick, you know, some marble, all that. The idea is, you know, they built this way for a reason. And why did they do it? Because it's everywhere. So the idea must have worked everywhere. Um, and Bitcoin urbanism is basically an exploration of, if that old center, or not old center, I guess if Main Street was built that way on a gold standard, and we build suburbia on a fiat standard, you know, how do we get back from suburbia to a traditional development pattern with sound money? So that's what I am writing about, thinking through, and trying to figure out.
Makes sense. Yeah, it's really interesting to think about. Um, I think like the general consensus is that uh, under a Bitcoin standard, inflation wouldn't be such an issue, and that there'd be higher quality products because people wouldn't be making things just um, inexpensively, kind of like what you're describing. Because like, you know, the houses that you're describing are well built compared to you know, going out into the suburbs and seeing all the you know, cheap cookie cutter houses that um, are not very well built in comparison. Um, so
Yep.
it
So the I would say that the houses that were built um, I would say well, definitely pre Great Depression, but even before, you know, World War One, um, that those houses are still like around today. I mean, they may be pretty dilapidated, but, you know, if people were taking care of them, like, they're still around and they still function. You can replace, you know, the floors and the plaster walls with drywall and all that stuff now, but like the bones of the house ought to still be good. And when you are building stuff today, that's not necessarily the case. It's stick framing, stucco. It's a very simple process compared to what they used to do. Like if you had a brick or stone house, that's not going to go anywhere, right? Um, unlike the stuff that gets built today, which is in my mind part of the substitution effect, which is a symptom of inflation. Over time, if you're not able to, if the price of brick goes up 5% over time, and wood, which is much uh, more, I guess, readily available, you chop down a tree, put it through uh, a oh my goodness, a lumber mill, dry it, move on. And a lot of times it's a much easier material to work with. It's much faster to build, a wall with 2x4s than it is to lay bricks for, 2 days. So it's all about how fast can you do it and how cheaply. So
Yeah, I've been on Clubhouse quite a bit recently, listening to people talk about that, and Guy Swan's been on there just like screaming about it. Not literally, but he's pretty emotional about it, just about all the useless crap that's being produced. And it's really interesting. Like time preference is a big thing. So like a country like Germany, even though they're under a fiat standard, has generally a lower time preference. People are savers there, and that's they got. I think the people got really upset about when they went to negative interest rates over there. Um, and if you look at like German made goods, they're so much better in, in a lot of ways. Like I mean, their clocks, their cars, stuff like that, and um, it really is interesting to think about that. Just how time preference really changes things. But yeah, um, what are some like really? Have you seen Bitcoin entering in the conversation around real estate at all?
I would say no. I made a comment on Twitter the other day saying that who was it? I think maybe Francis made a comment about the Bitcoin real estate bubble popping and a rotation into Bitcoin. But in my experience, I don't think that's going to happen. My I would like to say politely that um, real estate is a very traditional finance kind of sect almost, because it depends so heavily on the fiat standard, right? You need to have all of this cheap credit in order for prices even just to be maintained. And in my experience, a lot of people who are in real estate simply will be like the second to last people to buy or understand Bitcoin next to central bankers. Um, that's kind of been my experience. I've definitely talked about it. There's no way that I haven't, said something to lots of different people, and with the environment that I grew in, with all the people that I know personally that have done real estate that are, I guess, very wealthy, very active, and own lots of it. They don't want anything to do with it. I don't think that's intuitively knowing that that they're on a fiat standard and that they depend on cheap credit. To them, it's more. I understand that rates are getting better, so therefore I'm able to cash out on more equity as I go along in time. But eventually, like that music stops. So I guess with my Substack, I'm trying to get that out there. I make a joke that eventually my dad will subscribe, maybe after 1,000 posts, but I'll see if I can do it. But for the most part, no, I don't think a lot of people in real estate really understand it. I'm sure. I've had real estate agents and stuff like or people like that reach out to me, but developers, no, no, haven't met any. Haven't met any. Haven't talked to any. A lot of it is just ignorance, or was it ignorance is bliss? So that's been my experience.
Yeah, I mean, it's definitely like an industry that benefits the most from um, the fiat standard, it sounds like. And so they'll be the last to adopt it. I've got some buddies that write mortgages, and on occasion I'll shill Bitcoin to them, and they look at me like I'm from space, so I totally get that. And then I look at them like those guys from The Big Short that were in Florida.
Yeah.
Um,
Well, it's aptly put because those guys were mortgage brokers. So yeah, I 100% agree. They're real estate as far as being close to the spigot for the Cantillon effect is probably right up there next to the bankers who are getting the money.
yeah,
A lot of times the real estate developments, especially the large ones, master plan communities, things like that, skyscrapers, those require, hundreds of millions of dollars in funding usually. So you've got to go to where the money is. And in that case, you're going to Wall Street. I get emails and updates from banks all the time from Wall Street about different deals going on around town. And, it is what it is. So,
yeah. I think that's really interesting. I sometimes, like, when I'm walking through Chicago, I'll just look up at these gigantic buildings and just I'm just astounded by it. Like all the raw materials it took to, and when you just have it all condensed together, it's like how much land was displaced to create this monstrosity, and how many people were involved, and how much money did it take to just construct this. It's interesting that we're kind of moving away from that. That was something I was really that Michael Saylor's been talking about a lot, is how we're moving more to a remote um, work environment, and how like the big cities are kind of declining in an extent. Um, but yeah, what's your take on Tesla and buying Bitcoin?
I would like to say that I was surprised, but I think our boy Sailor orange pilled Musk, way back. How long ago was their exchange? Was it like a month and a half ago? It was in December, wasn't it?
Yeah, I just saw
Yeah.
it. Yeah, December 20th. I just saw a screenshot of it.
Yeah. I think that from one rocket scientist to another, and between the two intellects that they have, that the conversation was relatively short. So, when you have two people who are dealing with, you know, absolute constraints in the physical world, and they're able to communicate on that level, those levels of what's possible and what's not possible. I think that that was a relatively short conversation. So I'm happy about it. You'll definitely get no gripes from me. I mean, it's a huge step forward in adoption because, as other people have said, um, it's a giant touch point for the people that have heard about Bitcoin over the years, and now it's on Tesla's balance sheet. I mean, for good or bad, however Tesla does its business, um, it's something that's really hard to avoid discussing, or for that matter, for the media, the financial news media, to brush off. I think uh, Ross Stevens' presentation with Michael Saylor in their Bitcoin for Corporations in the Macro Environment, I really think that hit. I think it'll hit home for a lot of companies, just because of the growth that they've been having, and it's one of those things where I can't remember who said it. It's the domino effect of, you got to get in and don't be the last one. You don't want to be the last one through the door to say, well, we just put Bitcoin on our balance sheet, so buy up our stock or whatever. But
Yeah, I think at this point, after watching MicroStrategy's stock rally like 230%, these S&P 500 companies are going to have trouble not adopting Bitcoin. And it's interesting. Like, as I'm thinking more about your ideas of Bitcoin urbanism. That sounds like a long term thing, like something that you might be like 50 years ahead of. Um, whereas like I think a lot of people underestimate Bitcoin in some ways and overestimate it in other ways. Um, as far as like, fiat, I don't think it's going away anytime soon. Um, though, I mean, to some extent, I think that would be nice if it did, because people would be benefiting a lot more from a Bitcoin standard. But um, at the same time, the infrastructure is not built out. Like we're just at the very beginning of things. Like Bitcoin is only 12 years old, and the internet at 12 years old was barely a fraction of what it is today. I mean,
Oh, I
even
know. I was there.
I mean, even looking like 10 years ago at YouTube and what was on there compared to like the quality content that we see today, where and all of the content is just unbelievable. Uh, Looking at how fast things progress, but it is a steady, slow progression. So yeah, it is really interesting to think about.
Well, and I think from, for the perspective of Bitcoin urbanism, I know you're saying that it's like 50 years out, but one of the things with the development model that is prevalent today, it's called the suburban experiment, is that in order to afford the suburban experiment, you have to continuously build out further on the edges of cities, and you have to build more. So it's a compounding deal. It's a Ponzi scheme. That's what Charles Marone refers to it as on his website, Strong Towns, and his organization. So that in order to afford, the past development that you've done in a city, you have to build more on the outskirts, and not only just more, you have to do increasingly more over time. So, typically in the physical world, since, we live in meat space and humans tend to beat things up over time, all of the infrastructure for that development built in, between, let's say, we'll use round years, 1950 to 1975, all of that goes bad after approximately 25 years. You've got to replace sewer pipes, water pipes, um, streets, sidewalks, all that stuff has to be replaced. So, how do you afford to do that? Well, either that property has to create enough wealth, enough money for the city so that they can go and replace it without losing money, or if it doesn't, then they have to have new money coming in to backfill their obligations to, replace the sidewalk in front of the house that was built in 1950. So if you take that forward, the house that was built in 1950, all of that stuff has to be replaced by 1975. And then it has to be replaced again in 2000. And then it has to be replaced again in 2025. Right. So this life cycle continues. Um, if you get to the point to where you have 3 life cycles, not only are you replacing everything that was built like around in 2000, um, where you had a giant expansion in the 90s, and then you had an even bigger expansion in the 2000s. You have to replace all the stuff that came before it too. Even over the century, dating back to, if you're in like New York City, you've got to go back to basically the beginning of time. I mean, I'm exaggerating, but you've got to go back to 300 years, and you've got all the stuff that you've got to deal with. So it only gets more expensive as you go. Um, and I think when we have a fiat standard and you have a central bank that's constantly printing money, providing cheaper debt, uh, stuff like that, the cities are able to get away with it only because the numbers are being masked, right? So the growth that's happening right now on the edge of Phoenix will pay for all sorts of infrastructure issues closer towards the center. So subdivisions built 50 years ago will get new pavement, new sidewalks and stuff as needed, but it's only being paid for because 60 miles the other direction, somebody's building a new subdivision. So the fees that are required from the city for that go to pay for, old infrastructure that should be self-sustaining. Unfortunately, it's not. So with Bitcoin, assuming that there's some sort of hyper Bitcoinization, even if it's in the next, 50 years, it's going to kind of reset the pricing mechanism. And it's also going to force municipalities to realize that A, their liabilities are much greater than they think they are. And B, the land that those liabilities are serving, the services, sewer, water, all that stuff, transportation, that land doesn't, that house doesn't provide enough income to the city to even remotely cover what the cost of replacing that infrastructure is.
Yeah,
Big problem.
that is really interesting to look at. And you know, the government likes to do those types of Ponzi schemes. I had uh, last year I had some people on from this think tank called Truth in Accounting, and they go and audit all the local governments and state governments and across the board. And one of just the incredible things that they do is they, like you were talking about, the masking the liabilities that they have. They when they borrow money, they list it as revenue on their balance sheets. So it looks like if you read their reports, I went and did this recently. I read the 2019 report for Tucson. And it looks like they're okay, but what they're not including is like the pensions and all the other expenses that they have, which are very, very unfunded, and it is pretty crazy. For sure. So yeah, as far as like a Bitcoin standard, what do you think about the idea of going and building a Citadel community up in Nevada and forming your own government?
That's interesting. I've been to Nevada. There's even less to see in the Arizona desert. So I would much rather stay here in Phoenix and build, I guess, I've called it the Copper Citadel. Love to do that. But, I think in time, the Citadel's an excellent concept simply because to me, it's a return to a more natural and freer state of people, whether that's they're acting in their communities or as city states. I think that essentially that's what it is. It's one of the first opportunities where people can act without, coercion of money in the form of whether it's inflation or a central minting authority, all that. So yeah, no, I've heard about it. I think it's pretty funny. I mean, unless they're going to, northern Nevada where I can go skiing, I don't know.
Yeah, I drove through Nevada last year and I was amazed at how beautiful it was. But yeah, it is pretty sparse as far as yeah, there's just there's just nothing there. It's good, it's cool to look at, but I feel like it'd be pretty tough to live in. I heard somewhere like well, I'm not going to throw a number out because I'll probably misrepresent it, but a very large portion is owned by the federal government. So I
Yeah,
think it's a
it's
little bit
it's about 88%.
yeah. I mean, my dream Citadel would be to buy like an old decommissioned Titan missile silo. Um, I don't know if you've ever been in one of those, but they're pretty
No, I've seen
sweet.
photos. Yeah.
Yeah, we've got one out here that you could tour. Yeah, it's like, I don't know, like 12 stories deep of just awesome, awesome.
So speaking of Nevada and the Bitcoin standard, the real question is, what does Area 51 look like on a Bitcoin standard?
Yeah. Funny story. I don't think I said this on the podcast yet, but I went down for the raid, um, just to kind
Did
of,
you really?
yeah, just to people watch, and it was a lot of fun. I didn't know a whole lot about the history of it before, but I crammed and was able to keep up and have some interesting conversations. And I actually got on the show Ancient Aliens.
Did you really?
Just yeah, just spewing some nonsense. I'm not I'm not like anti-alien, but I just feel like there's um, the more I've looked into it, it's pretty apparent that the government just loves to like sow disinformation around it, and they have these plants that cooperate with these people, and yeah, I feel like most of the stuff, it's one of those things that you can't really definitively know um, as a
Do
normal
you think
person.
Pomp? Do you think Pomp is a plant? He's always asking all of his guests, if they believe in aliens. He's pumping out the alien propaganda.
Yeah, I mean, I don't think I think he's pretty open-minded about it. No, the people that are the plants are the ones that like supposedly definitively have answers and say like there's
Ah,
aliens here, and like there was a whole story. I just went out to White Sands, New Mexico pretty recently, and there was some crazy story of some guy like listening into the radio communications with the base, and saying that there were aliens, and they put somebody with him and pretty much made him go crazy because they kept on feeding him all this nonsense. So that's kind of what I'm basing um, that off of. But yeah, I mean, the one guy I definitely think is a plant. I'm not an expert on this, and I don't look into it. It's like one of those things I enjoy to like fall asleep to, and keep an open mind about, but not take too seriously. But Tom DeLonge from Blink 182, that guy.
really?
Oh yeah, he's like full on alien dude, and I totally think it's just a bunch of misinformation nonsense. Um, but
The
yeah,
feds got to him, huh?
dude, the feds get to everybody. It's why we
Yep. To
need to
the
be
FBI agents
decentralized.
listening.
Well, that was an interesting story. I heard from one of the guys that was involved with the Phoenix meetup scene that the feds infiltrated and busted some guy for the peer-to-peer Bitcoin transactions. They like entrapped him over. I'm not sure if you've heard about that. The Fed
No, I
went
don't
and
remember
set.
reading about it.
Yeah, I don't know a lot about it, and I didn't ask a lot about it, but yeah, I guess the Fed sat down with him. It was like, "Are you okay with buying this, even if it was from illegal activities?"
Oh, I do remember that. That was like 2019, and he was basically well, he admitted to avoiding. I think he admitted to avoiding taxes and then making the Bitcoin originally from drug sales. But yeah, no, I remember that. It was a sting, and they they handheld him into basically admitting, saying that yeah, we're gonna buy this Bitcoin from you for $200,000, knowing that you got it through criminal activity and you're okay with that. And he's just like, yeah, let's do it. Screw the feds. It's like, oof, major oof.
So a good lesson for people is, well, probably not good to engage in illegal activities, but I don't know. At this point, it's impossible not to, with everything's just illegal. But yeah, don't don't. It's just best to say that you lost your Bitcoin in a boating accident or something
Yes, that's correct.
up at Lake Pleasant. That's a good place to lose your Bitcoin.
Either that or
Um,
it's I left my um what is it? I left my cold card at the Lost Dutchman mine. So if you find it, please return it to me. I'd appreciate that.
that's a good one. Yeah. Where are some good places people can follow your work?
Well, so I'm on Twitter, relatively active at KTLANNAN. And then my Substack is bitcoinurbanism.substack.com.
Awesome. I'll make sure to post those in the link. Well, I really appreciate
Cool.
you coming on. This is fun.
Yeah. Thank you for having me. I appreciate it.
Man, that was a great conversation with Kelly. Um, yeah, there's so much to take away from this interview. When you get into the nuts and bolts of things, and really see how things are operating, and what's being done in government and what's being done financially, economically, it's pretty terrifying. It's a system built to benefit a select few, and it's working really well at that. and it's working at the expense of normal people. And that's why I got into Bitcoin, is I saw this is our chance to really create a better future. I mean, just the idea of like sustainable cities built on a Bitcoin standard is amazing. It's an incredible idea. I was really grateful for Kelly to come on. But the learning curve for Bitcoin is pretty steep. It is something that requires you to learn things that you probably didn't know that you didn't know. So, like, to understand Bitcoin, you have to have like a decent understanding of economics. You have to have some understanding of cryptography, some understanding of computer science to really like get this thing. And there's so many good resources out there, but it takes work to do that. One of the best ways to learn about Bitcoin, though, is to go to Bitcoin meetups. I've been working with Brian Harrington, and that guy is awesome. He just has so much energy. He's one of the founders of the Orange County Bitcoin meetup, and there's so much good energy out there. And we're bringing it to Arizona. We've got events happening up in Phoenix with the Arizona Bitcoin Network, and events down here in Tucson with the Tucson Bitcoin Meetup. So check it out. And if you're a lone wolf in some small Arizona city, reach out to me, TucsonBitcoin at protonmail.com. I'd love to lend my support however I can. We have the opportunity right now to get Bitcoin into the hands of people that need it, and really can benefit greatly from it, and it's not like there's a boat that's leaving the dock, but man, our financial system is so broken, and every day that people are fully living in it and not embracing something so much better is a day that they're missing out, and losing. It's not just about getting rich, it's about protecting the value that you create, and it's about being a part of something that is moral and just overall superior. Like the Ponzi scheme of that we're seeing in the stock market and just the way that our government works, it's actually harmful. Hope you have a good one.